Welcome to Weekly Picks, where each week our analysts handpick their favourite narratives on the platform. This week's lineup: a high-torque silver miner in Santacruz Silver, a wealth manager walking through an ASIC storm in Fiducian Group, and a brutally honest take on Willamette Valley Vineyards demand slump. First up, Santacruz Silver Mining, with a narrative from community contributor Rockatella. The story here is all about torque to silver. Santacruz offers big upside if it can keep production steady, push all-in sustaining costs down, and keep cleaning up the balance sheet in a strong silver price environment. When those levers line up, the earnings and cash flow swing can be huge. But this isn't a sleepy compounder. The author is clear that the thesis is highly sensitive to metal prices, on-ground operating performance, and political and regulatory developments in Bolivia and Mexico. On valuation, the narrative sets fair value at $86 Canadian, calling the stock about 97% undervalued. Next up, we head to Australia with Fiducian Group and a narrative from Robbo. This thesis pairs very solid business fundamentals with a real-world regulatory overhang. Fiducian is framed as a high-quality wealth and funds management business with the upside case depending on three big execution items: resolving regulatory proceedings swiftly, visibly strengthening governance and compliance, and keeping advisors and fund flows on side before competitors can exploit reputational damage. On the numbers, the narrative sets fair value at $12 Australian and around 5% undervalued. It treats the ASIC action as an amber flag, weighing culture and compliance risk in a way that feels very much like a value investor stress testing a good business. Now let's move to the US with Willamette Valley Vineyards and a narrative from Woodworth Fund. This one is a bearish case, and it does not pull any punches. The narrative lays out shrinking demand, mounting operational losses, and a heavy reliance on preferred stock structures that leave common shareholders in a weak position. Unless management gets serious about cutting overhead and stabilizing volumes in an already tough alcohol market, the author argues that common equity looks less like a value idea and more like a speculative option on a turnaround that might not come. Here, fair value is pinned at $2 per share, and the stock is seen as about 33.5% overvalued. So what's next? Well, start by using these narrative fair values as your own decision anchors. That gives you clear buy, hold, and sell reference points so that you know when to act rather than reacting to headlines of volatility. Next up, head to the comments on each narrative to get answers to any questions you may have. And while you're there, dropping a like is a simple way to support the authors. Then broaden out from these three names. There are thousands of other narratives on the community page, each built on the same structure: a story, a forecast, and a fair value that you can test against your own view. Finally, if you've got a stock you know inside and out, turn that knowledge into a narrative of your own. Lay out the story, your forecast, and your fair value and share it with the community. If it meets our featuring criteria, you'll be in the running to be seen by millions as another Weekly Picks selection. That's it for this week. We'll see you in the next.